Well, hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This will be the mini S&P 500 futures contract. What we're looking at here actually on your screen is one of our new portfolios, the EVR3 portfolio. It's kind of a new portfolio, but certainly the methodologies have been around for years and years and years. So we're pretty excited to show you that. But we're looking at a chart of the market right here. Going to get right to the market analytics. Kind of a quiet day on this Monday, the 6th day of February. We had the favorable jobs report on Friday, had that huge gap higher. Fortunately, our swings were really able to capitalize that we're long on the move. So overall, I think MB, the original Matt Black, made about 5% on the day, but the day traders really didn't. That was due to primarily to swings, particularly in the MRSCM, and I think the swing system 15.0 and 5.0. Would have to look back, but about 5% of the day traders kind of took the day off. But kind of getting the same thing today. We've got that key 1340 level. 1340 level. Now we finally reached our first target zone. 1340 to 1360, roughly 1350 is kind of where we were targeting, but certainly the market loves to play off 40s and 80s, sometimes 20s, but 40s and 80s, particularly in the ES. As a matter of fact, that'll be the bottom of our next target zone. It'll be 1380 to 1400, but 1340 to 1360 is our first target zone, and that's why you're seeing this kind of resistance here in the market on the last couple of days. In fact, if you look at our proprietary indicators, our intraday dynamics, you see save this this indicator and maybe this indicator, arguably. Although this is the least influential in terms of trending days, you see that the overwhelming picture is not only negative divergences on this Monday, but certainly bearish. We have actually a bearish here, bearish here, bearish here. So we have three bearish indications. Essentially, the trend is nowhere. We're actually below not only the high of the prior day, but below the close, or right at it. So pretty strong resistance. Obviously, we're not going to throw out a free informational day trade. Excuse me. No, I mean you're really not gonna if it's not moving, you really can't trade it. And if you look at the price, all you have to do is look at the price action the last couple of days, and you can see the market is simply not moving. So, having said that, we're going to go ahead and look over quickly. So that's the intraday snapshot. Look over quickly at here's our free system. That trades the equity call value ratio and the VIX, and finally got a trade, but unfortunately it was a quick loss. Unfortunately, it was a quick loss. We can go ahead and view the strategy report on that. $121,000 in profit, almost $4,000 average trade net profit. This, of course, does include, as all of our systems do, slippage and commissions. Pretty impressive graph. And again, we've got a pretty impressive drawdown. So as we've been mentioning, this is for the year. So this again is a free system. So if any of you guys are interested in it, just simply write to into the office there, or go to the website and chat with the support team, get you involved in that. But as you can see right here, this is the mini Russell. We do have pretty strong resistance around the 40 level, certainly just now at 25. So the small caps are lagging, I believe, a little bit toward the to the large caps, the Dow and the S&P, which should be, I believe, bumping up against their key resistance. There's a quick shot of the daily S&P cash. I'm sorry, actually this is the futures contract, and again we're right up at the resistance of the July highs, the breakdown move. In fact, we're right at that, and that's of course why that was our first target. Is you have 1340 right here at this monstrous level of resistance. So we did actually on our discretionary stuff lighten our some of our swing exposure on the gap higher on Friday, given that it was into such an extreme level. But certainly we do continue to remain not only exposed to the long side, net long, but overall bullish on the market. And as you can see, we had our unofficial buy signal. Just had to take advantage of the price technicals in the formation around 1100. I believe the 1130 was the call. 1230, we finally got our official buy signal, official bullish switch. and of course that was at 1230, and now we're about 100 points higher on that. So almost 200 points unofficially, or over 200 points unofficially, 100 points, over 100 points officially in terms of our market timing. For all of you watching the free market analysis videos, certainly you've been able to capitalize on that and have profited handsomely, particularly on this latest move, which has just been a simply a beautiful trail higher in the market. And in terms of price technicals, obviously we do have the horizontal resistance, but we are above the recent highs, particularly with Friday's breakout move. So, I mean, you just really have to be long, which is why we continue to remain net long. We just wanted to book some profits in case this level, of course, as you see, this major trend line right here also serves as resistance. So we could get a retracement back to the 1300 level. This was a particularly shallow retracement here, particularly impressive. And that's what you always want to see, shallow retracements and then moves higher. That's a sign of a very strong market, but could reverse. Right now we do remain officially bullish on the market. Here's one of our systems that continue to be long, MRCM. We're still holding this long. Nice little gain there. We'll go ahead and pull up the strategy report on that, and this is part of quite a few of our portfolios. MRCM had a little bit of drawdown, as we mentioned. Boom, two beautiful winners get you right back up there. So you always want to take advantage of these pullbacks. I mean, they're simply just sale prices in the asset, essentially, and you definitely want to take advantage of those moves. So I'm going to go ahead and minimize this. We just came across that, and right now we're looking at this is the one we scaled out of. This system just went live about 6 months ago, actually, and it's just been beautiful. Winner, 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 chicken dinner, and another beautiful long. I mean, this was actually, we can zoom in on that. This was an insanely beautiful long. We went long right at the close, and of course caught that first gap higher, the continuation move, and then another gap higher. So two gaps was enough for this long position. We went ahead and booked our profits. Of course, this is on discretionary stuff that I'm referencing. Certainly the systems and the portfolios that don't exercise discretion are still long and holding on at 67 after going long around 35 in the market. So that's $2,500 gain. Just for the MDS. We can actually pull this up as well. See how it's been doing. Look at that. Simply beautiful. Just keeps reaching and reaching and reaching. MRCM PTL flat after booking some gains. This is slightly better than the MRCM because you have considerably less risk, about half the risk and the same amount of money potential. So the MRCM PTL, obviously pretty impressive. Gonna go ahead and look. We haven't been seeing much trade. The R30C has not traded. Look at these graphs here. The B has not traded. The A has not traded. These really like to pick their spots. I think we've had a couple of trades in the CBR. EVMCM has not traded. There you see the equity curves. ISRD did have one loser and then a quick winner. There you see a beautiful system. Again, green, 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 green. These are our platinum reserve models. EVR3, again, we have a new EVR3 portfolio that has about 3 derivations of the EVR3. So we're pretty excited about that. We'll take a look at the numbers here. You see the base EVR3. $300 average trade net profit, $4,200 maximum drawdown. That's trading 2 contracts, $80,000 over the last 10 years, and we'll look at that in a second. So we have here profit factor of 2. So ESM30X, ES30MX, $363,000, which you're having a lot of risk. 16 contracts is the maximum held there, but the profit is insane. Here's the base ESM30. Again, had that drawdown. We had that drawdown in 07 right there. The market fell apart, and again, the market fell apart. This system actually it succumbs to when you have global crises, which is why we always recommend you be 100% diversified across as many models as we have. That certainly lessens the risk overall and increases the reward. And so we're going to go ahead and look now. So that's how the ESM 30, actually we've been trading since a lot of our other top tier models haven't been trading. on our discretionary stuff, we've actually been trading the SM30, the base, and of course it's been absolutely insane with the winners that you see there. So it's been very nice and very helpful for the. So we're going to go ahead and minimize this and see what we're looking at. Evo MCM again hasn't traded the active. Here's the Aussie, putting up a nice winner. The active has been trading, if we can find that. There we go. So the Evo EM active has been putting up. There's another nice winner just the other day. This was last Wednesday, I guess. So it was Friday, Thursday, Wednesday. So a beautiful winner last Wednesday. So not particularly, not too bad, not too shabby. But we're gonna go ahead and look over and hopefully we don't go to a black space. There we go. So we mentioned that we had a couple portfolios to the website. We have some few offerings. We've updated some returns. Obviously, you get the updated returns for the MAPDT, the MSAUDT, the Delta DTS. Those are right here. Of course, we track those every day in Strategy Runner. And there was a 5% gain, a reference to the Map Black original, 5%, but kind of a quiet day. So there's the last 257 days, 450% essentially for the MAPDT. And you can see those updated returns again by just going to MapDT, clicking on the that'll open this Excel spreadsheet. Excuse me, and you'll be able to see the live up-to-date track records. But the EVR3 portfolio, the MB250K portfolio, and of course the Platinum Reserve that aren't tracked, but certainly we track them in our videos. We show them to you every week. Have some updated returns as well, so that's pretty nice up through February 2nd, and so you can go through and kind of look and see how the portfolios have been doing in February and January. As a matter of fact, I think these were last updated last October, and with pretty impressive gains for 44,000, 21, 11, -4, and in the first couple of days. It's been a pretty impressive February actually for the discretionary accounts, particularly the trade the top tier models, being the Platinum Reserve models like the EVR3 and the MB250. So there's the MB250, and what this does is this compiles all the trading models. $94,000 drawdown, but as you can see, almost $3 million in profit. Over the 37% actually was the maximum risk on a $250,000 account. 11% is the risk of the total equity, so that's essentially the maximum risk that you're going to have after you begin trading. So this is essentially the absolute risk. Again, this deducts both slippage and commission anticipated, and you're going to have essentially a maximum drawdown of 11% in this portfolio. And you can here's the interesting thing: you can go through and you can look at all the statistics of these portfolios. So there's against the benchmark. And you can go through and simply click. So there's the that's the MB250K. Here's a Platinum Reserve. Very interesting. $100,000 portfolio. The maximum drawdown is only 35,000. 35%, 14% as a percentage of total equity. So as your equity grows, what's been the maximum drawdown? Again, after slippage and commission. But here's what's interesting: you click here, you can view the track record of the PR100, or go over to the here's the EVR3 portfolio. It's a $50,000 portfolio. 34% risk, again 15% maximum drawdown as percentage of total equity. And so some very interesting statistics. This trades up to 12 contracts, and this is just day trading, so you're talking about $6,000 in margin. So you can start with considerably less than the 50,000 if you'd like, but you're going to have risk of $17,000, so at least 25. But this is a $50,000 relatively conservative portfolio. But you can view the trade list, and you can view what's interesting is you can view the full statistical report of the EVR3 portfolio. If you click here, it should come up. It's taking just a second there. The reason being is that it's actually, there you go. So there's the full performance report of said portfolio after slippage and commissions. $424,000 is over the last 10 years. And you can look at the equity graphs. Pretty interesting. You can widen that actually, and you can look at all the equity graphs. So that's pretty neat that you can do that. And you can look at drawdown graphs, see where the drawdowns were, how often, close trade drawdowns. That's pretty interesting. The market performance of the markets, the EVR3, that's the base. We have EVR3 with a filter, EVR3 active, and an EVR3T. So again, those are derivations of probably one of our top day trading models, and in compilation you get numbers like this. So pretty excited about that. If you guys have any questions about these portfolios, or you're interested, you can go to the website and subscribe, and actually just click back because you're still on our website, the MiniAnalyst.com, but you can't just jump to home. So say you want to subscribe to the EVR3, that portfolio, believe it or not, with an average trade net profit of $450, pretty impressive. Is just is just sorry about that. I was just looking at a couple of those numbers. There's it against the benchmark. Pretty impressive. That's how it's done recently. Pretty impressive. And again, the EVR3 has been ongoing for several years live. So you can actually, $19.99 is the list price. Now how this works out is this trades up to 12 contracts. Again, about $6,000 in margin at $500. 12 contracts. Now our competitors or brethren in the industry charge about $100 a contract per month. So that would be about the 12 contracts would be about $1,200 per month. $1,999 is the list price for per quarter. So that's 3 months. What's more, you can actually get it on special for $1,288 per quarter. Now that's 12 contracts, so essentially that would be $1,200 a month from our competitors. This is $1,200 essentially for 3 months. So you're looking at about $33 a month per contract to be able to make $450 average trade net profit. Pretty impressive stuff. So you can go ahead and just click add to cart there, and you'll get the $1,288 right there. So, and there you go, $1,280. If you want to do a year, you can actually enter 4. I don't know if this applies, but we can try. I don't think it will. Not at the special already reduced rate. So we'll apply that. You have to have 4 quantity. We do have 4 quantity. So just write into us if you're interested in one of these portfolios. We may be able to get you in to our yearly package. This is a quarterly special. You'll be able to save, I'm sure, 20% if you do a year, so it's almost a quarter free. So you'll be able to save about $1,200 off of this for a yearly rate. And the best part, well, that's a pretty good part, but the best part is you're also going to save at least $2 a round turn on commissions as well, full auto trading. So if you guys have any questions, go to the website, Chaz Support Team Live. Hope you enjoyed the video, the daily analytics, the intraday analytics for a particularly quiet day. A quick snapshot of how our systems have done, new compilations of portfolios to best stay on the cutting edge, to be able to approach the markets and provide you with the best amount of reward relative to risk that we can offer, and of course at a great value, and hopefully great service as well, is what we strive to. So shoot us an email to admin@MiniAnalyst.com, and hope you enjoyed the video, and we will see you next time.